Welcome to The Explainer. Let's jump right in. We're looking at a massive, absolute game changer of a shift happening right now in southern Africa. Literally just in, as of June 2026, Zimbabwe has officially greenlit the construction of a second gold refinery, and they're building it in the city of Bulawayo. Now, you might be thinking, okay, a new building, standard industrial news, right? But hold on, because when you look closer, this is actually a massive pivot in their national economic strategy. This isn't just about pouring concrete. It's about completely reshaping how one of Africa's leading gold producers handles its absolute most precious resource.
Okay, let's dive right into this. Here's our roadmap. We're going to start with the Bulawayo Gold Refinery itself. Then we'll look at the numbers in chasing 50 tons, unpack the beneficiation strategy, and finally figure out the winners in the value chain.
Kicking things off with Section 1, the Bulawayo Gold Refinery and how they're expanding capacity. So here's the deal. Right now, Zimbabwe is dealing with a pretty serious structural bottleneck. Almost all of their gold refining and exporting is funneled through just one single facility, the state-owned Fidelity Gold Refinery. Just imagine an entire country's gold wealth trying to squeeze through one single regular-sized door. Having just one licensed processing hub puts an insane amount of pressure on the system, especially, when national output is just skyrocketing. But now, by bringing this second facility in Bulawayo online, which is slated to kick off operations next year, the government is basically installing a giant pressure relief valve. It instantly expands domestic processing and physically decentralizes the whole shebang.
Moving right along to Section 2, chasing 50 tons and setting record gold targets.
And this brilliantly illustrates exactly what we're talking about, because the sheer scale of this pivot is honestly staggering. Last year, in 2025, Zimbabwe pulled off a record-breaking 46.7 tons of gold production. That is a massive volume of raw material trying to push through just one refining point. But get this, they aren't stopping there. The target for this year, 2026, is a super ambitious 50 tons. Officials have actually come right out and admitted that their current infrastructure just cannot handle these projected levels. I mean, think about it. You literally cannot hit a 50-ton target if your domestic processing pipeline is too narrow to actually refine the metal. Now, a surge like that doesn't just happen by accident, right? Three big drivers are pushing these numbers through the roof. First up, global gold prices are elevated, which naturally incentivizes everyone to extract as much as possible. Second, we're seeing this massive explosion in artisanal mining activity. Basically, everyday miners working smaller claims. And here's a wild stat. These small-scale miners actually deliver over 60% of the country's total gold, over half. And third, instead of trying to fight this artisanal boom, the government is leaning in. They're aggressively formalizing that production, pulling it out of the shadows and straight into the official economy. And of course, more formalization means a whole lot more gold showing up at the refinery door, demanding to be processed. Which brings us to Section 3, the beneficiation strategy, all about capturing more value. Okay, if you only take one single concept away from this explainer today, let it be beneficiation. Yes, it's a bit of dense industry jargon, but it is absolutely the key to understanding what Zimbabwe is trying to do here. Beneficiation is simply the strategic process of capturing way more economic value from your minerals by processing them domestically before you export them. It's literally the difference between selling a raw, untreated log of wood to someone versus taking the time to turn that log into a beautiful, high-end piece of furniture before putting it on the market. So, the crucial point here is looking at the old approach versus the new one. Historically, the big vulnerability for resource-rich nations has been this reliance on just exporting raw or barely processed minerals. Because when you do that, you are leaving a massive pile of money on the table for someone else in another country to scoop up when they do the refining. This new approach, which is being shouted from the rooftops by the approval of the Bulawayo refinery, shifts everything. It pivots away from just digging stuff out of the dirt and focuses squarely on domestic processing, adding real value and sparking genuine industrial development right inside Zimbabwe's borders. It's all about climbing up that value chain.
And that leads us to our final section, Section 4, Winners in the Value Chain, and exactly who benefits.
Now, what's really interesting about this slide is how it breaks down the actual impact on the ground. When we step back from the macroeconomics, you can see large-scale gold producers are huge winners here. They get alternative refining capacity, which drastically improves their efficiency and unblocks the bottlenecks that stall their cash flow. Then, look at the artisanal and small-scale miners. The folks producing the lion's share of the gold, they get plugged into a much more robust, accessible, and formal marketing system. And lastly, you've got the city of Bulawayo itself, which is now perfectly positioned for a major influx of investment, new jobs, and all the infrastructure that comes with it. We really have to remember why all this structural shifting matters on a global scale.
At the end of the day, gold remains Zimbabwe's absolute largest export earner. It is literally the lifeblood of the country's international trade. So pouring money into refining infrastructure isn't just some nice, good-to-have industrial upgrade. It is strategically crucial for generating foreign currency and building real long-term economic resilience. When gold exports go up and more of that value stays at home, the entire national economy feels that stabilization.
Which brings us to the ultimate million-dollar question facing policymakers and investors right now. The green light for the Bulawayo refinery proves that the intention is 100% there. But as these beneficiation targets keep rising, can Zimbabwe successfully convert its massive raw mineral wealth into broader, lasting economic value? This new refinery isn't just going to be a building. It's going to be watched by the entire world as the ultimate test of Zimbabwe's resource strategy. Will this be the catalyst that finally unlocks the country's full industrial potential? Watch this space closely. Thank you so much for joining me for this explainer. Keep learning, keep questioning, and I'll catch you next time.